Hey everybody, welcome back to the channel. Today I'm going to go over the ICT Silver Bullet Hour, the 2 to 3 p.m. session on June 20th. But we're going to do it a little differently today. We're going to do it play by play or candle by candle. And I'm going to press the buy and sell buttons and take partials, or where I should be taking partials, or where I would take partials. But I want to explain that this is not ideal, because let's say you have a line here and that's where I want to have my limit order. Price can come down, wick through it, and close right here, and if I hit the buy button, it's gonna buy at the close. It always buys or sells at the close, not where it goes. So that's why I'm still going to show you the long position and the short position, so you know where we would have actually got in at. So it's going to be off, but at least give you some idea if you did trade one or two contracts and how you did it, what you would earn or lose. Okay, so let's see how it plays out. We go candle by candle here. So what we start with is, we have the sell side taken right there. The liquidity's been taken. So we're looking for a short-term high or a market structure shift to happen to go long. So let's see what we get here. This dark gray is the start of the 2 o'clock hour. This is the ES, S&P 500, and the 1-minute chart. See what we get. Okay, so we do have a swing high right here. See if it takes out the swing low here. Let's see what we get here. 2 dojis, so you've already got a volume imbalance right here. You got another volume imbalance, so 2 volume imbalances right here. So let's see. That's a good, a long wick. Another volume imbalance. Okay, it doesn't take out the low here, obviously. Maybe we'll get one. Nope. Okay, another volume imbalance right there. That took out the low there. Okay, so that's good. Let's see what we get. Okay, so you can see that we have a short-term high taken out right here. Short-term, it's a high, swing high that took out the low. So this could technically, right, this little area right here, could be a market structure shift instead of a short-term high. Yeah, but where our candle ended was right here, where if I put my crosshairs on it, you would see that those were the same right there. So the relatively equal highs. So what I'd like to see is I'd like to see a candle push through this and break this for a market structure shift. It's the major swing high in this area that didn't take out this low, so this could be a mitigation block. Who knows? I'd like to see that on the next candle. So let's see what we get, and it does. Okay, so we have a market structure shift there, and we have a fair value gap there. When it comes back into this fair value gap, I'd take the trade, or if it comes into this volume imbalance, ideally I'd like to see it come down here, but if it came down into this fair value gap, I'd take a trade, and my stop would have to be below this volume imbalance. Okay, so I would have bought right there, but that seems too high, so hopefully another candle closes down here so it's closer. Okay, I'm going to buy 2 right there. So I'm buying 2 right here. It's 1 tick away of where it should have been. So I'm going to buy right there or there. Put my stop below this right here, because below this volume imbalance. And my 5 would be the opening of the 830 opening price. And then I'd take a partial if it goes right here, which is over 60%. So let's see what happens. My partial, let's see, so I got to lower this to 1. Let's see. Alright, so I would have sold 1 right there. Let's see what happens now. Fills in. Okay, that's good. Almost close to immediate rebalance, but leaves this little fair value gap open. Okay, I'm noticing that. I'm seeing that. trades into this fair value gap, so that could be another long entry. Well, no, I'm not taking it. I'm leaving it. I'm just leaving it. 5 is here. If I moved this up, 5 would be all these highs up here, so I don't want to take that. So let's just see what happens here. So it leaves the volume imbalance here, which is a good sign. Usually I like to see that rapid firing in my direction now, so I like to see it really take off at this point. And it doesn't. It leaves it still open. Doesn't fill it in. Still doesn't fill it in. So that's good right there. That's a good sign. Notice I'm 1 tick away right here. So for me, as I'm trading, I would move my stop when I take partials. Stop would have been broke even. And my stop right now, since I'm 1 tick away, I'm not going to let 1 tick stop me from... I'm not going to move my stop to break even, leave it there. When I'm 1 tick away and it's like this, I'm moving my stop to the nearest swing low. To this, technically it'd be right here. So that way I can capitalize on at least more profit than 0. I'm not going to let 1 tick, $250 or 0 based because of 1 tick. It's not going to happen. That's just stupid. That's not proper risk management. I don't care what anyone says. You're not going to lose $250 on one contract on 5 handles because of 1 tick. That's not smart. So I'm moving my stop up here. And yeah, if it hits me out and then comes out, I can live with that. I got more money out of it. It's a game of risk management and taking profit, taking out of the market, not being right or wrong. So for me, my stop in my head right now is right here. Now on TradingView on this thing, I have to get out on close of candles. So if anything closes about right here, I'm going to hit the sell 1 contract. Okay? Because my stop would have been here. And if it wicks through and stops, I'm taking it. Okay? Or it takes me out and then I'm getting out. So that's the 2 options I have right now. So he's still 1 tick away. Come on. Come on. Okay. We're selling. Now we've sold. We made $250 on this trade. Now we didn't never hit profit, but we took our partials. 1 here, 1 here. And that's how we got our 5 handles. But off 2 contracts, but you know what? We took something out of the market. So I'm fine with that. But when we look at this, it stopped here. Okay? It didn't fill in this volume imbalance. If we'd had this marked this up, we'd see what price is doing here. It stopped at this volume imbalance. Okay? It just wanted to stop dead on its tracks right there. Okay, so then what did it do? But this is the swing low, the high. So it took out a market structure shift right here. And when it comes through here, ideally I'd like to have a candle close. So if the next one, let's see what happens here. It doesn't. Okay, a candle does close below it. So there's your market structure shifts right there. And it leaves behind a volume imbalance. So for me, I'm leaving a volume imbalance there. Okay. So if price comes back into this volume imbalance, I would take a trade. I will sell 2 contracts. I'm going short. So let's see what happens here. Okay, so I'm selling 2 right there. Selling 2 right there. And where are we targeting? I'm targeting these lows right here. Okay. I'd get a partial in this area, about 60%. I eyeball it. I'd like to use structure, so you can use this fair value, this volume imbalance right here. Closes right in here. I'll be buying 1 contract to take a partial. Let's see if it takes me in out or what happens. Oops. Okay, so I'm definitely buying a contract there. Taking something off, and then I'm waiting for it to take me out here. You still see a volume imbalance, you still have a fair value gap here, So it comes up in here. You definitely want to get out. Your stop would be break even. Stop would be break even. And you can move your stop up just to preserve equity if you wanted to, or capital. It's up to you. I do that. Okay. That's good. And see, it would have taken us out there, but now I got to close right there, which is not ideal because on this is the close, but we got our whole take profit here. So at 43.75 is where it's at, and right now it's 43.50. So 1.25 handles is where we are losing because of this program. So, but we're still, so far, 2 trades, $637 in the profit. Not bad. Let's see how it goes here. Let's change this back up to 2 in case we want to buy or sell again. Let's see what happens here. Price is coming up. Now, am I looking? It did take sell side liquidity here. So let's move this. Let's just change this to sell side take, and it's taking sell side. So let's see. Here's a volume, a fair value gap. Here's a volume imbalance. Let's mark up our fib and see where we're at. Okay, 50%'s in here. So I need to come up more. And it's in the middle of this fair value gap here, the high end. So for me, I'd probably want it to come up into this volume imbalance again. Be in the 62 range, somewhere in there. I would sell again and aim for this low. Why not go higher? Well, because for me, it did need to take out this swing high here for it to be a market structure shift. I'm not counting this as a market structure shift. This little is not a market structure shift for me, for my rules. So I'm still bearish. This is just a pullback for me. See, we could sell one right here, but like I said, I'd want it to come up higher, over 50%, because I've already taken 2 trades and I'm good. I don't want to risk the capital that I've already gotten, so I'm looking for a higher thing. And now that we're very bullish right now, coming back, I'd like to see it kind of turn over a little bit, or hit this and come down. You know what I'm saying? So I'd like to see that. That would be good. See, now we're below. So I'm trying to, for me to take this trade to be ideal, I need it to come up and respect the volume imbalance. It is respecting this fair value gap right here, so you could take the trade. But your stop would still be above the volume imbalance. So I'm kind of, that just seems like a lot to have as a stop loss. Okay, so I'd like to see it a little lower. I already have two wins. I got to have a good clean setup, and for me, that's not it for me. Okay, so right there, that for me, closing right here. Yeah, I'm gonna take a trade. Take it there, because I would have had my order right there, so I have to take it right there. Lower this to 1, and then we'll buy. If I come down, now that it's up here, it would have been, if it come down below here, we would have taken it. So let me just mark off where we would go here. We'd enter on here actually, and our stop would be above this candle because of treat the volume imbalance like a fair value gap. You go off the first candle. And then our drawn liquidity would be down here, this low. There's 5 handles again. All right, close below that, so I'm going to buy one right there. Get out of that because I would have hit my take partial there. Stop would have been, it broke even. And let's see if we get the rest of our contract or not. Okay, so that didn't take us out. There's actually, if I zoom in, there's just a little bit of you can't see it. There's just a little bit of green right there, so it didn't take us out. So my stop right now is right here. I've moved it down. I'm not letting that, not even a tick stop me from profit. If you had your stop at break even, I'm not losing that. So my stop's right here. Okay. So if it comes up anywhere near here, I'm going to buy the last one and get out. Or it's going to take us out and I'm going to have to close it out. Okay. There you go. Buying it right there because that's where my stop would have been taking us out there. Well, that's a shame. see if it ever, that would have definitely taken us out of our break even or our stop loss. Let's see if it ever does trade through it. It does. Okay. So we would have had 3 completely winning trades. Right now we got $862.50 on this by taking partials and having to get out not where our stop loss is or our take profit is because of the way TradingView is set up. But you can at least see how these all would have been taken. Right there, you got out right there. If you let it play out, we did our stop right here. So that was a new way of doing it. I wanted to show you that. That was our PM Silver Bullet on June 20th.